Hey everyone, welcome to another video by Optionables. My name is Saket and it had been quite some time since we made our last video. The reason behind this is we were moving Target from beta version to stable version. Right now Target is ready to use and all you have to do is go to target.optionables.in and you can automate all your system trades absolutely for free using Target. So now let's quickly start off by looking at the market summary and what ended up happening the current week. So if we actually look at Nifty and Bank Nifty this week, they haven't moved much at all. The weekly open to close difference is hardly around 0.3%. That means they have more or less closed exactly where they opened this particular week. But we got to see a lot of volatility in between. If you look at Bank Nifty, it traded in the range of 41,700 to 43,500. So that is almost a range of 1,800 points. And even if you look at Nifty, it traded in the range of 17,750 all the way to 18,100. So again, that is also a range of close to around 350, 400 points. So even though close to close basis, there is no movement in the market, there was huge swings which actually made traders' life like you and me difficult. There is also one more reason why exactly an option seller's life was difficult this particular week. It is not just about the volatility, it is also about the VIX. So if you remember in the month of October and November, so it was pretty easy to sell options and make money. Just go and sell a straddle, go and sell a strangle, and the market used to move in a small range entire day and you used to get brilliant decay. But that has started to change from the month of December. As the market started to get volatile, the VIX started increasing. And when VIX increases, the option premiums do not decay like the way they do when the VIX falls. And this makes option sellers' life very difficult because let's say the market starts moving upside. So only the calls will start to increase whereas the puts won't decrease. Similarly, if the market starts moving downside, the puts will explode but the calls won't dip. And that's the reason whenever there is a move, immediately the option sellers go to a loss because one side will start expanding and the other side won't decay. And this is one thing which is very common when the VIX starts to increase from lower level to higher level, and that is the exact phase where we are. During the beginning of December, the VIX was trading somewhere around 13 and right now we are almost touching 16. And thanks to a good rally on Friday, so we saw some cool down in VIX and right now it is somewhere around 14.7 or 14.8. So now when we look at the sectorial performance this week, we got to see that metal and automobile performed really well, whereas the laggards were mainly bank. And also if you look at the Bajaj twins, so there was a news that the loan growth was not up to the mark and immediately the same day they ended up crashing close to around 6 to 7%. And not just that, even other finance and banking companies have actually underperformed this week. If you look at ICICI Access, actually all of the top banks are down except HDFC. So now we will discuss little about the economics in our third part. And if you look at the economic data which came out recently, one, we had the US inflation data and we also had the India inflation data. So US inflation data came in line with the estimates, which is 6.5%, and also Indian inflation data was well below the estimates. So the anticipation was 5.9%, whereas Indian inflation data came just at 5.72%. So that is 18 basis points below the expectation. And both of these news are actually pretty positive. Why? One, we can clearly see the US inflation cool down. If you go back couple of quarters, you saw that US inflation was close to around 8.5%. And right now, last month itself, we saw inflation dip to around 7%. And right now we are close to around 6.5%. And this is a very positive news. So if the inflation starts to come down, then Fed will put a pause on hiking the interest rate by big margin. So right now the estimation is that in the further upcoming FOMC meet, they might only increase it by 25 basis points instead of 50 basis points. And that would be pretty positive for the market. If you look at S&P 500 for that matter, in the last 100 years, so 2022 was the fourth worst performing year for S&P 500. I know that is pretty surprising, but it is true that this is the fourth worst performing year in the entire history of 100 years for S&P 500. So S&P is almost down by 22% this year alone. One, we are seeing good recovery in the economic indicators, and second, we have also seen underperformance by the equity markets. So given all of this, we might expect some good performance in 2023 and 24 by the equity markets. And also, if you look at the results, so IT sector started to come out with its results. So TCS, Infosys, HCL and Wipro, all of them came out with their results, and IT sector has performed well above expectations. So if you look at the results of Infosys or Wipro or HCL, all of them have actually exceeded the estimates, and this is also a positive news. So the most important result what we are awaiting tomorrow is that of HDFC Bank, and that is going to definitely give a good direction to Bank Nifty also. So now moving on to the fourth part, and that is what happened to our trade this week. So this week was not a good week for us, and we ended with a loss of close to around 2% or somewhere close to 10 to 11 lakh. And the thing is, I will also be attaching a link from our broker, that is Firstock, which is a verified P&L from Firstock. So Firstock will be generating a system report. This report would be of our weekly P&L, that is the P&L for this particular week, which is verified by our broker himself. And you will also get to know what are the total charges, debit, credit, gross P&L and also the net P&L. So now if I have to talk about this week, so all of you know the big up move which came on Wednesday, right? So somewhere around 10 to 10:15 a.m. we got to see a huge up move in Bank Nifty, right from 41,800 all the way to 42,100. So in this up move, we actually got stuck and we got hit by close to around 1.7% or close to around 8 lakh. And also yesterday, which is the expiry day. So expiry day, even though we were right with our view, so we were bearish in the morning and we were later bullish towards the afternoon. In spite of being right with the view, just because we were little off by the timing, we actually ended up losing another 1.7%, which is again close to around 8 to 9 lakh. Totally, we ended up losing close to around 17 lakh just in matter of 2 days. So when you actually talk about expiry, we had 42,100 short straddle from the morning. So the thing is, even though the market ended almost around 42,100 itself, so it ended around 42,080 and we would have made a huge profit. The thing is, when Bank Nifty started to go down, it broke 41,800 and started to move towards 41,700. We couldn't hold the position any longer because the overall straddle premium was just around 250 points by afternoon, and the market had already moved 320 points against us, and our puts were totally deep in the money. So towards the end, if there was no bounce back which had happened, then we would have lost a lot. So because of that, we had to cut the trade, but unfortunately towards the end, market ended where exactly we had created a short straddle. Coming to Monday and Tuesday, they were pretty flat days. So we neither ended up gaining much or losing much. And finally coming to Friday, so we were bullish on the market and we entered some future positions in Nifty and Bank Nifty. And luckily on Friday, the markets ended up rallying and we were able to recover most of what we had lost on Wednesday and Thursday. So overall, we made close to around 11 to 12 lakh. So we recovered almost around 60 to 70% of what we had lost in the previous 2 days. So right now we are again carrying the same trade ahead of the pre-budget rally. So we are expecting maybe the markets can head higher and consolidate there, and that's the reason right now we are bullish on the market and we are still carrying our futures. So now we'll be quickly moving on to the screen recording where I'll be sharing you the market outlook for next week. In this part, we are going to look at the market outlook for the coming week. So when we shot the first part, that time HDFC Bank results was not yet out. But right now, since we know the HDFC Bank result, it is up by 18.5% and it is way above the estimates. So some estimates were even projecting almost around 14% increase, but we have close to around 18.5% increase. And even the NII growth is really good for HDFC Bank. And given this, we might see some boost in Bank Nifty. So we don't know how HDFC Bank is going to react, but given that HDFC Bank has reported good set of numbers, we can also expect other private lenders like Axis and ICICI also to report very good numbers. So now, talking about the market outlook. So I'm going to keep this really short because if you are actually looking at the markets from almost around 2 to 3 weeks, or forget 2 to 3 weeks, even if you are looking at the market from the month of December, it is consolidating in a very broad range. So now, if I take at Bank Nifty, and if you actually take a look at Bank Nifty is consolidating in a very broad range of 43,500 to 41,700. So when we go back and come to November 10th or November 11th, this was the time when actually market broke 41,700. So if you actually go back months together, so almost around 8 to 10 months, you see that market had previously made a high of 41,700 and it had corrected from there. So after a very long period, almost around 3 to 4 quarters, market finally tested 41,700 and it broke 41,700. So after it broke 41,700, it came towards 43,500. So you can see it was a very nice rally towards 43,500 and it consolidated around 43,500, unable to break 43,500. So again, almost after 10 days, market finally broke 43,500 and stood above 43,500 for some more days and finally came down. So once it came down below 43,500, it has not crossed that again. So even though there was a gap up, immediately it was sold into and the market started coming down. So similarly, if you look at the downside, so we know that 41,700 was a very good resistance, which means now it will act as a good support. And that is what we have seen here multiple times. 41,700 has acted as support. So given this particular market movement, we can expect the market to still continue consolidating in this broader range of 43,400 or 43,500 to 41,700. So this can be the broader range where we can expect the market to consolidate. Maybe something like a 42,700 short straddle might be a good option for month end. So I am not suggesting the current week because the premiums will be low, but for month end, a 42,700 might be a good option if it is pricing in at least around 1000 points, and we can hold it till either one of the levels is broken. So either on the upside or the downside. So when we look at Nifty similarly, again, very similar to Bank Nifty, even Nifty is consolidating in a very broad range of 17,750 to 18,250. So again here you can simply end up creating a 18,000 short straddle. So I feel that is a very good bet. So you can create the month end 18,000 short straddle. And if one of these levels are taken out, let's assume 18,200 is taken out on the higher side, you can simply exit the call option. And let's assume 17,750 is taken down on the lower side, you can simply exit the put option. So I believe market will end up consolidating in this particular range. So why exactly am I suggesting next week? So let me just show you by opening the option chain. So you can see the current week option chain 18,000 is just pricing in close to around 200 points. But if we change the expiry to 25th, so you can see that 18,000 short straddle is pricing in close to around 320 points. So as long as the market consolidates between 750 and 250, so it is going to be very good for us. If one of the side is broken, you can simply exit the call or a put option accordingly, and you will still have close to around 70 points which you can take. So this is the view what we have on the market. So I am slightly bullish on Bank Nifty specifically because HDFC Bank has come out with good results, and also we are heading towards the budget season. So there might be some kind of pre-budget rally and we might end up hitting the higher end of the range. So I won't be surprised if we actually go and hit 43,500 or retest 43,500 or 43,400 before the budget. So even Nifty, I won't be surprised if we go and retest 18,250 or 18,300 before the budget, right? So this is the broader view what we have, and coming to the positions what we hold. Since I told you I'm bullish on the market, so we are expecting market to consolidate in the broader range, but we are still bullish on the market. So we are long on Bank Nifty futures as well as Nifty futures. So I would ask you to just ignore days M2M and P&L. And the reason why it is showing 82 lakh negative is quite simple. There was mock trading going on Firstock yesterday. So you can see that we know that Bank Nifty LTP is not 39,880, right? So it is somewhere around 42,300, right? So since there was mock trading going on, so all these prices are simulated prices, and that's the reason it is showing 82 lakh as days M2M. So if we leave that apart, so the important thing is, because we were expecting market to retest the higher range, we are currently long on both Nifty as well as Bank Nifty futures. So maybe at the higher end of the range, we would be happy to cut our futures. So if you actually look at it, you can see the average prices. The average prices are actually correct. So Nifty we have entered at 17,900, and Bank Nifty we have entered at 42,250 as our average price. So that is for the position what we hold. And when we look at the open interest, you can see PCR ratio is 1 for Bank Nifty, and Nifty PCR ratio is zero point 0.9. That means more or less there is equal amount of calls and equal amount of puts. So that's the reason we can expect some kind of consolidation in the market. So I would be more than happy if the market actually ends up breaking on the higher side, and I'm also bullish on the market. So if the earning season is good and if the budget is good, definitely we can expect some breakout to happen on the higher side. And the reason is FIIs are continuously selling, and DIIs are continuously trying to support the market, and that's the reason it is consolidating. If FIIs start reducing the selling, then definitely we can see the market head higher. So that is something which all of us would definitely hope for. If they reduce the selling, and global markets are also looking quite positive. UK market is already at almost 52-week high and also lifetime high. So it won't be long before we retest our all-time high again, right? So one thing is, if the budget is positive, earning season is good, definitely the FII selling will reduce and we will retest all-time high. So this was a brief summary, and with this we also come to the end of this video. If you have liked this video, do not forget to hit the like button, share this video, and subscribe to Optionables. Thank you so much for joining.